Hi, and welcome back to the financial plan. Our discussions up until now have revolved around personal, individual financial planning, and today we're going to move the focus more to business assurance, or the financial planning that involves companies and business owners. And so let's start out and talk about, let's make a few assumptions and say you guys own a business, you've been going for a couple of years, and the value is 5 million. So
How would you establish the value?
Okay, so if you've been going for longer than a year, you'll have audited financial statements. Generally, if it's a private company, we're talking a PEY.
Yeah.
Okay, and then the accountant that you're dealing with would also show you that there are about 4 different ways of valuing, depending on what type of business you have. And there might be a lot of goodwill involved. Other companies have got a turnover where looking at the profit that is made and net profits that are made in the business. And often the best way of valuing a business, especially with SMEs, is you ask yourself the question, what would somebody write a check for the business is often the best way. So if I said to you, for example, okay, I'd give you R1 million for your business, you might say no. And then I keep going and I say 2 million, 3 million.
Yeah, and you'd eventually get to a number where I'd agree.
Exactly. Now you guys looking at each other and you're going like, maybe now we're starting to get there, because you've obviously drawing an income and you're drawing an income out the business. So you kind of got an idea what it's worth.
Yeah.
If you take that money now and you say, okay, cool, I've sold my business, you're sitting with the money in your hand, you're going like, versus what I was actually drawing out of the business and the goodwill and where I want to be in 3, 5, 10 years time. So once we've established that business value, now the question becomes this. So now what happens if, let's say, you pass away? Okay, what happens to your shares? Let's say you own 50% shares, it's worth 5 million. You pass away, what happens to your shares?
Yeah, well, whoever's the beneficiary of my estate will end up with the shares.
Correct. Could be your partner, could be your parents, or whatever it might be. Okay.
So if Adam was to pass away, then whoever benefits from his estate, from his shares, I would sort of almost be forced to be doing business with them.
Yeah. They're the new shareholders in your business. Okay, now if you guys are obviously intricately involved, you're focusing on your strength, and together you're making up the business. This person that's inherited the shares
probably can't contribute.
Exactly.
Yeah.
Okay, so now what?
So I think big issue arises, because we've lost Aidan's skill in the business as well.
That's one thing. Yeah, we'll talk about key person insurance in the weeks to come. But what about now they're saying, okay, thanks. How much was Aidan drawing per month? Just pay me that into my account every month.
Yeah, for what?
For what?
For zero value add to the business.
Yeah.
So they're saying, well, if you're not prepared to do that, then
pay me out.
Yeah. So how are you going to pay them out $2.5 million?
Well, yeah, at least you've got 2.5 million just liquid capital. It would be a bit of a problem.
Well, even if you had 2.5 million rand in your access bond or in shares or something, it would really be quite an expensive exercise to go and cash in your share portfolio or a loan from the bank for 2.5 million so that you could now go and buy the shares, right?
Sure.
Yeah. So obviously we spoke about the life protection pillar in our previous video right in the beginning. So the cheapest way of replacing your income if you die is through life cover.
Yeah.
So what we do is you would take a life policy on Dylan's life for 2.5 million. Dylan, you would take a life policy on Aidan's life for 2.5 million. So you would own each other's policies. Okay. Very important that you pay each other's premiums, although in your case they'll be very similar. Whereas if we were 50% shareholders now, I'm paying a small premium and you're paying a bigger premium because of our profiles.
Sure.
Okay. And then what would happen is, if in our same scenario, Aidan passes away, you get paid out 2.5 million rand. Okay. Partner gets the shares, estate gets the shares. Okay. Now comes the crucial part. And sometimes you've got people out there that have got the life policies in place, but it's not backed up by a buy and sell agreement.
I was going to ask that, Joe, if we go ahead and we put that policy in place, what is to sort of guarantee that the beneficiary would actually agree to sell the shares back to you?
Exactly. Yeah. So the buy and sell agreement forces Aidan's estate or partner to sell you the shares, and forces you to buy them. Yeah.
Okay.
So that's very upfront.
Very important to have both.
Yeah, you've got to have both. Yeah. And it's got to be updated. Because what happens if it's not updated?
Yeah, probably won't pay out the full value of the shares.
Yeah.
So you still got to come. You still got to go to the bank now.
Yeah.
And you say, look, business worth 5 million, you haven't updated your cover or your buy and sell agreement. Okay, buy and sell agreement is for the value. So if the cover is not updated and the cover is 7.5 million from 5 million, you haven't updated it, you're going to be short.
Yeah.
Mm.
And Joe, you mentioned on death there being life cover and how that's very similar to just a normal life cover you take out in your own personal capacity.
Yeah.
Would it only pay out on death, or is there another option?
Good question. Yeah. So obviously that's a very defined thing, right? So you're either alive or you're not. Okay?
Yeah.
But now it's a bit of a grey area if you're disabled. Okay, we've spoken about loss of income protection in the second pillar, right?
Yeah.
And we have capital disability that pays out a lump sum, and you've got the monthly income protection that pays out a monthly income if you can't work for longer than a month and stops if you can. So obviously now we're talking about a defined event whereby if you are disabled and injured to the point where
You can't contribute to the business.
Yeah.
Yeah.
Okay.
then you would want to add that
To that same policy.
to the same policy and into the buy and sell. But be careful now. Let's say you're computer programmers and you're sitting with a buy and sell agreement with occupational disability. So now you're in a wheelchair.
You can still technically work.
Yeah, because now you're say a paraplegic, not a quadriplegic
Yeah.
or something. And now you're both involved in IT and you can actually work fine. But now you've written into the buy and sell agreement that there's occupational disability of 2.5 million. So now what happens is you get disabled and get paid out 2.5 million.
But you still want to
Yeah,
work.
you actually don't want don't want to sell your shares, but now it's like written into the buy and sell agreement. Yeah, so you've got to be very careful. We spoke about impairment cover, where we will only pay out if you like properly disabled. In other words, you won't, in all likelihood, be able to add value to the company.
Mm.
So, for example, you're quadriplegic, maybe, although I know people who are quadriplegics who are still working today, but so you've got to be very careful when it comes to getting advice as to writing that into the buy and sell agreement, because then now you're saying like, okay, no, well then that's fine, I don't want to sell my shares. So then Dylan goes like, okay, fine, cool, I'll just keep your 2.5 million. You say, but I'm disabled, you can't keep my 2.5 million. You say, well then sell me the shares. So
Yeah.
Yeah.
you just need to be
So it's very important to do that, like an appropriate and proper business needs analysis as such,
Yeah.
to detail these specific events.
Yeah. Talking about businesses, obviously one of the things you always have to take into consideration is tax. Are the premiums for those policies tax deductible or not?
No. So pretty much like an individual policy, okay? Even if they were, like, we in the past when we talk about key person insurance and the company owns a life policy on the staff members to replace them and to, if they suffer financially, we'll talk about that in the future. Then you had a choice to claim it as a day. But most people wouldn't, because then it's like you can't have your cake and eat it. What would happen is the 2.5 million
Would be taxed.
Would be taxed.
Okay.
So
So at least
now
the
you say-
payout itself
Yeah.
is tax free.
So the payout is tax free. So why would you, even if you could claim, a million life cover, remember, only cost me $250 a month for me personally. So for you, it's like next to nothing. So, for the sake of getting a tax deduction on that, you wouldn't even want to do it, even if you could. Okay. So, but what is very important when it comes to is a state duty, the implications of a state duty and how it's structured. For example, if you cannot show that you paid Aiden's premiums and Aiden pays your premiums, you should actually, in your case, it's simple, you could use each other's bank accounts. But if you now got 3 partners and there's one, 2 owners, one and then 2. So now often we advise just use the company bank account, but then debit your loan accounts every month. So the accountant is now showing and adding it like a fringe benefit, so that you are showing. Yeah, absolutely. And the other example is if you're family members, like so if it's husband and wife or brothers and sisters and stuff, then to avoid state duty now you don't want to start structuring business assurance and that to avoid, because it's not estate dutiable. In other words, in our scenario now, you guys aren't related. That 2.5 million rand would not be dutiable in your estate either. So when you're receiving that, if it's for the purposes of partnership insurance as well, so that is an advantage. Where your individual life cover is obviously subject to section 4Q if it's the spouse. So
Interesting.
so there's that to consider as well. So make sure if you're an SM business owner that you've got life cover to buy out the shares if anything goes wrong, and that it's backed up by a proper buy and sell agreement.
Cool.
Yeah,
Fantastic.
cool. All right. So thanks for watching. We hope you've found it interesting. And next time we'll chat more about key person insurance.
Don't forget to like and subscribe.
Exactly.
Cheers for now.
Cheers.